Hello, thank you for joining me in another video. And today we're going to be doing something a little bit different. We're actually going to be going over my portfolio, my YouTube portfolio, which I started to track here on this channel around about a month ago, just after the start of the year. So we're going to go through the positions that I hold in that, and then crucially, my thoughts behind why I hold those stocks and the position sizes and why some are larger holdings than others. And also we're going to have a look at the overall performance and what my thoughts are for the future and other companies that I'm looking at. What we'll also do is touch on other investments that I'm in. So we do have like my main portfolio, which I've been growing over the years. So there are some stocks in there which are not in this portfolio. So I'm also going to be going over the other stocks that I'm interested in and that I own. So without further ado, let's get into the actual portfolio. So what we've got here is an overview of the portfolio so far. So I started it just over a month ago and I've put £10,000 in there, and you can see we've remarkably pretty much flat, just very slight up on the year. And if we compare that to the S&P 500, just looking now, that is also flat year to date. Just share this screen as well. So if we compare this to the S&P 500, we are... we're flat year to date on there as well. So my portfolio is pretty much matching that. Of course, it's very early. It's a very early start. And also another thing to bear in mind here is that I am also still 50% in cash. With us starting the year with the market kind of very, very high in a lot of growth stocks, I am dripping this money in. I wasn't just putting it all in at once. So we do have that cash buffer, which I'm going to continue to invest in as well. And also it's worth noting about I invest in growth stocks, I invest in technology stocks. And so when you see a choppy market like we have now, growth stocks get hit the hardest. So actually, all things considered, for me to be kind of flat on this, I'm happy with that at the moment. And where I'm buying these positions that I'm buying, I'm hoping will outperform the market over the long term. And I have been quite prudent with my buys here as well. There is some where I've bought too early, but I have, like, for example, my NBIS position, I have been buying on dips there, and I've got myself a nice low average from buying the low dips this year so far. So first of all, let's take a look at NBIS. So NBIS is a stock that I do a lot of research on, and I make a lot of videos on this. And it is currently number one in my portfolio. From the increase that I've had, it's actually up 80% from my average price, which I'm very happy with. Year to date, it's up 13%, and I've just been averaging in on this, particularly when it's dipped a bit. I've bought more shares, but this has been a company that I'm excited about for this year, and that's why I've just been nibbling away at that as well. And you can see this isn't actually the most money that I put into a stock, but 20% up year on year. 20% up since on my overall position. I'm very happy with, and I'm going to keep on adding to this position as well. It's a company that I'm very happy with, and it's my way of basically AI is this huge narrative. I've got some AI exposure in this portfolio, but also it is a company that I still think is undervalued and has just got huge growth potential in the future. It's not just selling GPUs and renting them out. I think it's actually building a lot of infrastructure that lots of people are going to be using as well. So that's why it's there, and it is currently my number one position. Then moving on to Grab. So this is down 7% since when I've purchased, or from my average. Grab is one that I've also been doing videos on. I've been investing in Grab in my portfolio for probably nearly a year now. My thesis on Grab is that like it's growing, it's going to continue taking market share, and it's going to be kind of a winner takes all or winner takes most market in Southeast Asia when it comes to delivering goods and also mobility. So that's kind of my theory there. It's really taken a hit this year. So I did buy in a lower average than I have in my other portfolio, and we're still down 7%. It seems with Grab that when the market gets hit, Grab gets hit, and it's just not really getting any love on the upside. I think it being a company not based in America, where investors aren't using the product, I think it does suffer from that. And also there's just not a lot of news. They're very tight-lipped and just keep their head down and execute. Which is a good thing for running a business, but also it means not a lot of investors know about the company, and there's not a lot to get excited about. So that is kind of struggling at the moment, but I'm happy with my investment. And looking at the recent earnings results they've just released, it's nothing to change my investment thesis. So I'm happy to hold here. I don't know if I'm going to be adding any more shares here, but I'm happy kind of with this position. I went quite big on Grab early on because when I started this portfolio, it was reasonably depressed compared to the other names that I was interested in. Then we got to the next one. Then we've got Meta. So Meta has been on a very bumpy ride. I mean, if we go and look at the Meta price at the moment, sitting at $640. My average here, so you can see I'm actually up on my Meta. I've got one Meta share as they're expensive shares. I'm only working with limited capital here, but I'm up 5% on that share. And I thought I'd lost kind of I thought the boat had sailed as well, to be honest, with Meta. They reported their earnings and we got all the way up to $740. I thought we'd kind of lost the chance there and I was kicking myself for not buying more. But of course, the market being the way it is it's basically given up all of that pump that it got after the earnings. We're back down to $640. So I may look at buying some more, or another Meta share as well. I hold Meta in my main portfolio. The only thing with dealing with this is that Meta shares are so expensive, you can't kind of nibble away at Meta shares. And if I take one more share, it's going to be a big bump up in a position size. But if it drops a little bit more, I'm happy to do that. It's one of the companies that I'm excited about for this year. And I just think it's a good place to park your money. And kind of some context as well, I always think it's worth talking about what we see from our positions. Meta is not something that I'm expecting to double in the next year. But the way I think about Meta is that certainly in this environment, I think it's better than cash. And I also think it's better than the S&P 500, which you would take as kind of the market tracker and kind of the easy gains that you can make. And I think Meta is a better place to park my money at the moment, which is why I have it in there. Next, moving on to Shopify. I have a long history of Shopify. I bought it back in 2016 and I've held it ever since. So that's in my main portfolio. And in this big SaaS sell-off that we've had, Shopify has also got really hit and it went down to around $110. And I bought a few shares down there as well. And you can see on Shopify, I'm up 12% on that. And I've only held these for 1 to 2 weeks. Shopify I think, is just getting unnecessarily sold, as if people think AI is going to mean that people can create their own Shopify. I don't think the company is misunderstood. It always has been misunderstood, but the idea people can recreate Shopify or won't need it. Whereas I'm someone who works with Shopify. It's your product database, it's your customer database, it's your marketing database, it's your analytics database. There is so much to this company. And again, I think in terms of the sell-off, Shopify has been scooped into that completely unnecessarily, which is why I bought some shares there. Moving down onto Amazon. So Amazon, again, is what I was talking about with how I think about Meta. Is just, it's a good place to park your capital, in my personal opinion. It's a great company executing well that has had its valuation cut down. And it's cut down despite its earnings looking all good, and just because they're investing in a huge amount of capex. And they're investing in a huge amount of capex because they've got such huge demand coming for their AWS services. So it's going to be a hit on their free cash flow, which everyone's terrified about. But at the end of the day, it's a positive for the business. They are saying we've got so much demand, we need to spend so much money on infrastructure to serve these people. So it's going to be good in the future. They have done this in the past. If you would have got scared about their massive capital investments when they're building AWS and got out of the company, that would have been a very, very bad decision. I think the same is the case here as well. So Amazon, again, I'm happy scooping up these shares when I get a good opportunity, and I'm happy just holding these for the long term. And if we can get a good entry price on that, then I think it's a really great opportunity to do that. I'm certainly not expecting, I'm expecting more growth from the likes of NBIS and Grab, and I look for those companies. But in terms of parking capital somewhere, Meta and Amazon, I think, are really good risk to reward weighted. Then we'll go into these other last three, which are a lot more speculative. So if we're talking about what I was talking there, the risk to reward ratio, if we talk about these ones, it is flipped the other way. There is a lot more risk, but there is potential to have more reward. Zeta Global. So I've done a video about this company. I'm far from massively bullish about this company. I think there are a lot of question marks about the industry it's in and the growth and kind of its AI capabilities. What I do see is, well, I was looking at this company when it was around $24. It dropped down to around $15, and that's when I bought these shares. They do have earnings coming up, and I think actually looking at their revenue compared to their multiple, it is very, very reasonable. If we're in a good market environment and they can continue to show growth and also turn profitable for this year, I think that puts the company in a very, very good standpoint. Now, if the company hadn't just been slashed from $24 down to $15, I wouldn't have purchased these. I was thinking about it, but given that I was given those opportunities, it means that there's so much more upside just getting it back up to that $24 range, which is why I've invested in Zeta Global as well. Again, it's more speculative. If this company falls 80%, maybe 80% is a bit much, but this is not something I'm as confident in as Amazon or Meta, but the upside reward could be a lot more. And then talking into that, we've got Bitmine. So Bitmine is basically my exposure to crypto in this. It had already been taking a hit when I started this portfolio, and since then it has taken much more of a hit, and that is what can happen with cryptocurrencies. If you don't know, Bitmine is basically an Ethereum treasury. The whole company is basically acquiring as much Ethereum as possible, and that's basically what you're investing in, is Ethereum price and Ethereum's utility going up, then so will Bitmine. You can see this is by far the biggest loser that I've had, 37% down in over a month. And this is why I personally like to keep these positions small, because basically a bet on cryptocurrency. If we're in a bullish crypto environment, then this will go up. If we're not in a bullish crypto environment, which has happened, then this will go down. I'm down on this position, as you can see. Then move on to the last one. And again, this is Firefly Aerospace. If you've seen my other videos, you know that I'm a big fan of Rocket Lab. I've invested with them since the IPO, and that is overall my biggest holding in my main portfolio is Rocket Lab. The reason I went into Firefly Aerospace here is because, again, the valuation has been cut down a lot. Not that that's a good time to invest, because it can always go lower. But I see a potential. They've got their next launch coming up, which is scheduled to come in the next few weeks. We'll see when it comes. But if they make this launch successful, I think there'll be a big narrative shift on this company with how much hype there is. I mean, Firefly is valued at around $5 billion at the moment, I think. With how much hype there is in the space industry at the moment, with Rocket Lab soaring, AST Space Mobile soaring, and the SpaceX IPO, I see if they get this launch right, or maybe a couple of contracts, Firefly could potentially get re-rated as kind of an all-round space company that makes satellites, delivers satellites. It's got rocket launches. It's got a rocket that launches, and it's building another rocket that with Northrop Grumman to go in the medium launch space as well. So again, this is a small position. I might buy a little bit more around this area, and I do have some in my other portfolio, but it is very much it's very much speculation. I know this problem has its faults. This company has its faults, sorry. It doesn't execute as well as Rocket Lab. It doesn't have the founding team and the management team like Rocket Lab, but the valuation is so cheap, I do think it could be valued a bit more than this in the future. It could also go to zero. That is a bet I'm taking, and I'm kind of weighing that bet with allocation. As you can see here, it is a riskier bet, which is why it's smaller. So that's what we're holding inside this portfolio, and we can see kind of how I've weighted my portfolio and the companies that I'm most confident in, and the ones that are a bit more speculative. And you can see what happens when it goes well. So such as NBIS, which is, okay, that's a company I'm confident in. I've bought the dips, got a nice low average, and I'm already up 18%. And then we got the likes of like Bitmine, which is just being catastrophic because of the crypto downturn. I'm happy holding this for the long term, but you can see why crypto is so volatile, and it can be dangerous to invest a lot of money into crypto if you can't handle that. And then we got my other bets, kind of like Firefly Aerospace and Zeta Global, which is very much going to be, let's see how they execute in the future. In terms of other investments that I have that are not inside of this, we have Rocket Lab, as I mentioned. That is my largest position. I'm holding that at the moment. I have trimmed on the way up, but it's still by far my largest position. I sold a chunk of shares at like $97. I checked the other day, it was $97. If we see another dip around here, I probably will buy those shares back, just that I'm happy holding long term. Because I sold them so much higher. But I'm certainly not going to be vigorously adding to Rocket Lab at the moment. I've got my profit there, and if they carry on executing and I see any good opportunities, you've got to remember with a company like Rocket Lab, it's got so much baked in. If the market sees a downturn, it's really going to get hit. So if we do get hit and the company's still executing, I'll be purchasing more there as well. I'm trying to have a think if there's any more positions that I'm particularly interested in at the moment that are in my other portfolio. We've got Meta, we've got Amazon. I hold them in my other portfolio. Shopify I've held for a very long time as well. NBIS, Grab is one of my biggest positions in my portfolio as well. There are a couple of other companies that I'm interested in. For example, Rubrik, which is a cybersecurity company. I'm also invested them as a small starter position. I believe that is it. There might be another couple small starter positions in there, but when I'm talking about these, I'm talking, what I like to do is if I'm interested in a name, I will buy a small piece just so I'm tracking it. I might not ever buy any more, but just so I'm tracking it and just so it's in my head and so I've got some money in the game. And then it also makes me aware of the stock price. If I want to buy on any dips or if we have a massive pump, you know, I might want to sell if I'm not that confident about the company as well. So that's how I'm thinking, and that's kind of what my portfolio structure is looking like at the moment. If I'm buying any new companies, I will most likely be doing a video about that company as well, so I can show basically my research that's gone behind that purchase. But at the moment, what I'm looking at is to continue to acquire more NBIS. I'm going to be buying the likes of Amazon and Meta if we get good opportunities. And then if any other good opportunities come across my eyes as well, I'll also be putting them in here as well. So at the moment, we've still got $5,000 cash on the sidelines, which I am going to be investing. And I am also going to be adding cash to this portfolio throughout the year as well. So we can see how we do. And I'll keep on doing these check-ins to show you guys how it's going as well. So I hope you found this useful. I personally really like to see what people's actual investments are like this, and crucially what their thought process is, because it's all good and well to say, okay, well, buy this company, buy this company, buy this company. What is your thought process behind it? When did you buy it? Like, for example, I'm not buying Rocket Lab right now, but I have a lot of Rocket Lab because I bought it previously. And also, what is your portfolio allocation like? It's very easy to talk about buy this, buy this, buy this. I love this company. What is your allocation like on this? You can see, although I can tell you I invested in Firefly and I can tell you I invested in NBIS, the allocation shows a very different story in terms of how confident I am in those companies and what I think the potential growth is as well. So I hope it was useful to go through this. If it was useful, please do let me know. I don't expect this video to get as many views as normal, just because it's not about one particular company. But if you did find this useful, please do let me know. If you want to follow along as well, please do subscribe, because I'm going to be doing a lot more videos on this coming on in the future so we can keep track of it. So apart from that, any questions, let me know in the comments. And if there's any stocks you're particularly interested in as well and want me to have a look at, also let me know in the comments. And apart from that, thank you for watching, and I'll see you on the very next video very soon.